Good morning, everybody. Welcome to the Flow Show. New week begins Monday, the 11th of November. We will be pausing the show at 11 o'clock for the 2-minute silence for Remembrance Day. So if things go silent, you know why. Hope you'll join us in respecting that moment. Until then, let's get stuck into the news and headlines and see what's going on in markets as well. Over in China, and there was a story out a few hours ago over the weekend saying that Xi and his leadership might be looking at plans to counter some of the US tariffs by, as they say, showering the EU and others with various tariff cuts, visa exemptions, incentives for investments and the like. They've had discussions, as we know, last week, particularly the EU and China over electric vehicles and tariffs there. But this is a piece out, so they might try and swerve around what Trump lays on them by offering big sweeteners to other partners. We'll see if that comes to anything. In the meantime, and on the data front, things aren't looking too good on the inflationary front in China. As you can see there, CPI coming in 0.3% as expected, but it is down from 0.4%, so down a bit. PPI also looking worse than expected. So they're in a little bit of an inflationary slump over there in China. As you can see, the numbers have been very weak for quite some time, but did manage to turn around these losses that we saw late last year, turn them into positives, but it's nothing to write home about, and inflation has been heading lower. So it's all something that Chinese authorities will be keeping a close eye on as well. They want to get that back moving a bit high. Anyway, not too high like we saw elsewhere, but they want that getting back up as well. Over in Japan, we had the BOJ's summary of opinions for the October meeting. So not the minutes, although they are sort of minutes. It's just a summary of opinions from the latest meeting. Last week we got the minutes, which were for the prior meeting. So this one is more up to date on the what they're talking about at the meeting at the end of October. Some people have been picking headlines out of this this summary to make a case why dollar yen's shot up today. There's always opinions on all sides of the BOJ decision. So anyway, I'll read through the some of those opinions. Firstly, one member said that no change to the bank's stance, and it will adjust its degree of monetary policy if its economic and price forecasts are met, which is pretty much where they're at overall. One said they must be vigilant to overseas economic outlook and market moves. One member said, though, that they're no longer in a stage where it needs to communicate. It can afford to spend time scrutinising risks. So someone there doesn't want to spend too much time banging on about what's going on elsewhere in terms of getting on with doing policy themselves. Another member said a US hard landing is subsiding, but cannot say yet with any certainty that markets are stabilising. Another said the BOJ must communicate clearly that it will continue to raise its policy rate if the economic and price forecasts are met. Another member said the BOJ must take time and move cautiously in raising rates, and that was one of the lines that the wires have jumped on this morning, that perhaps they're being a bit more cautious on things. But overall, there's no real difference in any of those lines. There's always a varied range of opinions. There's nothing really leaning one way or another in those. The Japanese Parliament had the special session today, opening session today since the election, and PM Ishiba has been re-elected as PM. So the Parliament is reopening, or going to be reopening. He will remain PM, but obviously it's going to remain very difficult to pass any sort of legislation, seeing as there's no majorities held. So there's still a lot of horse playing going on over there. This morning in Norway, we also got some CPI data, moving the right way for the Norges Bank. Year-to-date core CPI coming down to 2.7% from 3.1%. It was estimated to come in at 2.7%, so that was bang on the money. CPI itself year on year came in at 2.6%. Was expected to fall to 2.4%, so not a bigger drop as was expected there. We know the Norges are on hold till the end of the year, and they're looking to maybe do something from Q1 2025, or at least the first half 2025. But maybe the December meeting at the Norges will give us the full super nuts and what they're going to expect next year. Over at the BOE, we've had one member out since the BOE meeting, Chief Economist Peel, who's more towards the less dovish side of things. He said the scope for more cuts is there if disinflation continues. He says the current direction of travel is to see more disinflation. He says the rate path depends on economic disturbances. Nothing is set in stone on monetary policy, and continued restriction is needed. There was only one member last week who didn't vote for a cut, and that was Mann. She's due to speak this week as well, tomorrow, I think, or maybe Wednesday. Can't remember. So we'll get her opinions as well. We do have a few central bank speakers this week, as you can imagine, including Powell as well. Over in Germany, we've still got that political mess over there. Everywhere you look, there's a political mess going on at the moment. So German Chancellor Scholz has signalled that he may be up for having a discussion on an earlier election. It was looking like there's two things going on there. There's a confidence vote and then a potential election if he loses that confidence vote. A lot of talk last week was around January, but he's indicated that a confidence vote before Christmas may be possible. He feels confident he'd win it as well. And then he said an early general election should take place quickly. So we could get this confidence vote coming before markets break up for the holidays. The opposition parties obviously are pushing for that to happen much more quickly than that. And then we'll see when an election comes after that, if he loses that confidence vote, of course. Over at the ECB's McLuth says we must carefully pace policy loosening. Going back to some of the data last week on Friday, not an awful lot, but we got Canadian jobs, which was a bit of a meh in the end. Employment came in a little softer than expected at 14,500, was expected just under 28,000, but it was a positive number, so not much bother that. We obviously did get some big numbers over the last few months, some big swings around as well. Full-time employment, though, gained again. Part-time employment dropped, so good news in that full-time employment picked up the slack there. The participation rate dropped to 6.8%, which kept the unemployment rate unchanged, was expected to tick up. That's probably a participation rate move there. Then later on, we got the Michigan consumer sentiment, which improved. Flash number, this is for November, improved to 73 from 70.5 prior. But it was a bit of a story of the current conditions are a little bit worse, but the future is looking a little bit better because expectations went up. So current conditions down, expectations up. On the inflation front, 1 year CPI eased to 2.6%, but the longer term, 5 to 10 year expectations moved up to 3.1%. So say overall, still positive data for that one, but nothing big there for the Fed to get their teeth stuck into. TD, they've joined the long list of banks, or the growing list of banks expecting fewer Fed cuts to come. So they see fewer cuts in 2025. They even see a pause in the first half of the year. And this is a theme the market is really getting into at the moment as to whether the Fed are going to have to slow cuts based on A, what Trump might do, and B, that the data is still coming out fairly solid. Speaking of Trump, we got a good example last week of social media trading yet again. A lot of us in the chat room looking at this at the moment, whether he's going to be active on the socials first and foremost. And it seems like he is, because he picked up on Friday his postings and over the weekend, but also where he's going to post first or the most. At the moment, it's looking like his own Truth Social platform is where he's going to post a lot of stuff. So it's going to potentially pay to get on there, set up an account, and just, even if you just follow Donald Trump, I got an account last week just to see. There was a story out about his Truth Social company, about him having to liquidate his holdings and shares and whatever. He denied that, and he denied it first on Truth Social, and then the wires picked it up about a minute later. Okay, so if you were following, and if you were happening to trade that, you got that news as quickly as everyone else. So that's the power of watching the social medias, particularly for something like Donald Trump. This was a big, huge part of trading during his first stint as president, and those Truth Social shares were getting hammered, and they sprung up 12% not long after he tweeted that. So that's the power of his social media posts. So don't be caught out by any moves on Trump. If he's putting it up on social media, you need to be following it and watching it. Brian, doesn't matter what you think, whether he was lying or not, that's irrelevant. What's relevant is that he can post and move markets, and that's all we are interested in. That's all I'm interested in, not the politics, not whether he's talking out his arse. I don't care about that. I care that if he posts something and it moves markets, I want to know it as soon as possible, so I can know how to react to it or grab a trade or whatever. So don't let the politics come into it. It's purely, from a market and a trading aspect, you want to be getting hold of this information. It's a little bit light on the headlines and whatnot today, so there's not much else to get into. It's a moderate week for data. Let's get that up and we can have a look what's going on this week. Zippo today, it's a half US holiday for Veterans Day. So bond markets are shut, but stocks will be open later. Yeah, might be a little bit of a quiet one out of the US session today. Tomorrow we get final CPI data from Germany. We get a lot of finals coming in this week, CPI data. We also get the useless UK jobs report. They're still faffing around trying to get the numbers right, but we have to take it at its word. So we'll take it whatever the numbers are at the time. We'll be looking to see if there's a bit of weakness in the jobs market, maybe showing up since the election, since the budget. Might be a little bit early to see some of that coming through. Zoo survey in Germany, we'll get a look to see if things have been picking up. We've obviously seen some sort of small green shoots in manufacturing, maybe stronger green shoots in services if you're taking the PMI. So the Zoo survey will show us if there's any real improvement in that lot there. On Wednesday, it's all about US CPI. That's going to be the big number. It's everything that we get now is going to be obviously with a view on what's going to happen in December for the Fed. So it's the pendulums are going to be out, no doubt. The mood at the moment is that the market is leaning towards lower or less cuts from the Fed. So this data is either going to embolden that or wash it out the window. So CPI, and just looking at early expectations, expected to stay unchanged. I think it's 2.6%, 2.4%, 2.4%. Well, expected to go up to 2.6%, but some wires have that as coming in unchanged as well. The core number expected unchanged at 3.3%. So we're looking at either a bit of a move up or an unchanged number for that CPI data on the early look. Right, coming into Thursday, we've got Aussie jobs. So if you're trading that currency there, you need to keep an eye on that one. See if there's any bigger weakness coming into the jobs market, or if it still remains pretty tight, because again, that's going to determine what the RBA are going to do. We get a lot of secondary revisions or secondary readings for Q3 GDPs, so probably not an awful lot to take from that one, particularly in the UK, but there is the monthly number, so that will give us a bit more of an updated view than the quarterly numbers. We've already had the flash numbers, so these are revisions. Same for the Eurozone as well. That's going to be a revision. ECB minutes, not sure they're going to move the needle, given we've heard 100 times from every ECB member since. Then we got PPI, US PPI as well coming out, which will add or subtract from what we got from the CPI data too. A ton of data from China on Friday, so we'll keep half an eye on that one. And as I said, a bit more final CPI numbers on Friday, and then we do start to get some of the manufacturing data of the new month. Empire State coming out, which has been a bit of a flip-flopper of late, but given it's a Friday, it might just give the market something to get its teeth stuck into. Import-export prices and industrial production as well, and not forgetting retail sales. So US CPI and retail sales are going to be the big numbers to look at there. The retail sales, this might be a bit of a funny one, because it's coming before we step into the big holiday retail period, Thanksgiving, Christmas, all the Black Friday stuff and all Cyber Monday crap and all that stuff. So it's made retail sales, you've got to take them as a whole, November and December really. There have been some indications, I just saw some commentary that spending might have tailed off a little bit, just ahead of the big sales, because why buy stuff now when you can potentially buy it cheaper in a couple of weeks' time? That's the effect these things have. But again, probably be a bit of a mover, that one, or could be a bit of a mover, particularly for the Fed. So that's the data round up for this week. So not too much, but enough bits and pieces to keep us going. And no doubt we've got plenty of headlines coming from elsewhere. As I said, Powell is speaking this week as well, and Bailey is too. So we'll get some comments from them and see if there's any pushback against what the market is expecting. Kay's off this week, Ali, so he should be back next week, all being well. Right, let's have a look at what's going on. I'm going to start here since it's on the page. Aussie Kiwi, this is a short, as you know, I've been playing for a bit. I did take a little bit of profit on Friday off my latest entry up the top here, just to stick a little bit in the bank for the weekend. But other than that, I'm happy to stay on the short side here. It's not coming down too far towards the old magnet at 108, but it's respecting the top up here. I think if we get a third move up here, if we get a quick return up here, then we probably are heading much higher. So I'm going to be, as I said previously, I'm going to be a little bit more dynamic getting out on the dips just to protect against another move higher. Jobs report on Wednesday could be a bit of a mover, obviously, for the Aussie, so I'll keep an eye on that one as well. So as mentioned, dollar yen is, well, the dollar in general is looking like it's been back on the trail. I've been saying this for a while. It hasn't really looked like breaking this move yet. Getting below and holding below 152 would be a significant move, and more so down towards this area here. But we've had this flip-flopping around it. We did get a tentative hold just above 13.14 on Friday, so it's keeping this whole thing in play. Are we going to get a move finally up to 155 and see what that's made of? I don't know. It's a bit of a tough read today because we haven't got US bond markets open, and this one had been following yields. If you take off this move today, matched it off against something like 10-year yields, you can see it's a pretty similar pattern. We had that move to the highs and then back down again. So this one had been looking lockstep, but it's going on its own at the moment. There is a broad dollar bid around a lot of pairs at the moment. Again, you can use many brushes to paint the picture for this one. It's Trump, it's the Fed, it's whatever. But it is what it is. Euro dollar looks like it's breaking under 107. Okay, we've got a bit of it's going a bit wider. We've got this little support area down here, which we're into at the moment, 106, 60, 70. Other than that, then we're looking potentially down towards the low 106s, maybe even into the figure. And that's going to be a bit of an area down there to look at. On the longer term, nothing gets really interested unless we're getting down to this 105 area. And just to show you that on the bigger picture, just a wider picture, that's what we're looking at down here. And this 105 area, I'll need to go even wider. This 105 level, as you can see, is a real biggie. Always one that stays on my chart. It's a very, very important level. Yes, we have broken below it previously. We did it here, but when we came back above, we held it by this little indiscretion. We've held it. So this is going to be a big old level down here should we get down there. And the first part of that move is obviously staying below 107, which we haven't really had a retest just yet. We've got up 90s, but maybe we need a bit of confirmation. If not, if we go straight through this level down here, 106 60s, then that'll be bearish enough. But we've had these couple of little tests. Third time it's gone, so we could be well on the way. Euro sterling's looking a bit of the same, a bit different though. We had the break through 83s, and that's already becoming resistance. So that's, again, he's looking pretty okay from this perspective in terms of the break. Typically, and I said this last week in our chat room, I feel like we might be looking at a potential break. So I was going to go with some sell stops under, but I'll condition that with going long first. So I went long on Friday, 83, 05, 06, and that's not looking good at the moment. But my stops are under this level here, this 82.76 level, which again is another bit of a longer term level, goes back to this sort of area, 2019s, 2020s, and we've had a bit of action around there and going back even further. So it's a bit of a level here. Otherwise, the big level is really going to be this 50 fib underneath. Again, let's just put it on a little bit of a clearer chart to show you. So I'm going to, if I get a chance, I might, if we get a bounce in here back to 83s, I might knock out the long portion and just run my sell stop below that 82.76 level. But as you can see, if we get down there, then we've got another huge level down at 82s. We've got this 50 fib area, tracement area, but the 82 level is another pretty big level going back quite some time. So down there could be the area where we finally see a bounce or not. And if it keeps going, well, then we're really getting into some moves, some areas we haven't been for quite some years. So we'll keep an eye on that one. Dollar CAD, yeah, I'm looking at this one, main. I wanted to have a nibble in this one on Friday. I was looking to see whether we got a decent, really decent jobs data, give us a decent dip in that. I ended up dropping in a couple of bids down here, just below where we were, down to the figure, but no, nothing happening from that. I'm getting the twitch that this is setting up for at least a test of that 140 area, if not a break. Just the price action at the moment. We've obviously had this strong rally through the latter part of September and obviously all through October. It's had a decent bit of corrective action here. It is running into a bit more trouble at this 139.50, a level, you know, that's holding more than anything else held during this rally. Two stages for this one. We need to get above 139.50 and then stay above 139.50. If you see that happening, a bit similar to what we got in euro sterling, where you get below a level and then you start to hold it. If we start seeing that sort of action here around 139.50, then you can probably mark it that we're going to have a test of 140. What happens on that is obviously anyone's guess. And again, you've got to go to the really wide charts. And if we get a break up here, then we could be heading up towards this old double top in the 146s. So this break could be a big one if it moves. Of course, nothing's set in stone. We could move up 50, 60, 70 pips, make a new high, and then just reverse all the way back again. So I'm getting interested in dropping some buy stops above here, just to maybe see if I can catch a break, maybe somewhere like 140, 20, 25, something like that. But yeah, I'm getting the feeling in my water that we might be heading up for a break up here. Ali, talking about the BOE, he is not willing to be dovish. You still see bullishness in the pound. Well, you're seeing obviously bullish. It's talking about the BOE and Bailey and whether he's dovish or not. No, he wasn't overly dovish, considering what he said in previous comments that they could be a bit more aggressive and activist. And the pound, it depends what pound you're looking at. Cable's obviously lower of the dollar influence. Oh, let's go back to the short term. Cable's obviously feeling the weight of this dollar move, but euro sterling is definitely seeing the pound more bid. So it depends what quid you want to look at. So it's not the pound driving this one. It's the dollar driving this one. And I think that's the same for euro sterling at the moment. It's not that the pound is really strong. It's more like euro dollar is looking much weaker than cable. So it's that speed limit, if you like. So the euro is doing a bit more moving this time than cable is. So that's your difference. On the fundamental side, there's not been much change, apart from the Bank of England, obviously, still saying they're going to go slowly and cautiously, which was always going to be the case. So that's probably a bit part behind this move, at least from the fundamentals, that the ECB are going to continue cutting. They're still going to be in front of the Bank of England. But growth-wise and things like that, yes, the UK is maybe just edging it still from the Eurozone, but we're all coming off a low bar here for both areas. So, yeah, just keep in mind what's happening here. Looking at the vols, dollar yen, the vols there are still trailing around the 10% since the election. So still fairly elevated, but it's come down a bit. Not that it's mattered much to dollar yen, but that's the way things are. Let's look at Aussie dollar while we're here. Because that obviously had that really sharp move up last week, up to the high, nearly up to 67, but it's turned right around again. I don't know if you can believe this Trump stuff or you can't. The market's going to move where the market's going to move, and I'm going to be watching to see if it gets too extreme one way. I don't think Trump is going to go as hard on tariffs and stuff. I think it's all a negotiating tactic to get people around the table and then get the deal done. But that won't stop the market from doing its thing and trading to the extremes, as it always likes to do. We know pretty much where the marker is on the downside here for Aussie dollar. It's still down around this 65, 30s, 40s area. So just keep an eye on that. We've had one little test below, but it couldn't stay below, and that's a significant move. But if we come down here quickly again, then a secondary break could mean we're pushing lower. And then where we're heading from that point, we could be coming down all the way to 63.5, that sort of area, which is a decent level as well. So there's a long way to go. There's lots of levels in between, but you know, the price action is speaking volumes at the moment. We had all this election up and down, but the secondary move is more dollar strength. Right, I haven't got an awful lot to talk about, and as I said, we have got this minute silence coming up, so I'm going to end the show here, boys and girls, so I can participate in that. Have a great day, everybody, and we'll pick everything up tomorrow. Have a good one.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.